This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, after a huge week in Singapore, welcome back to Breaking Banks Europe. I'm here live from Web Summit in Lisbon, but this time is different because as I'm based here, I came by bike, so it doesn't feel like the same type of conference that I usually go. I'm here with Ali Niknam, founder and CEO, and many other things because I don't know if I can say this, but it was just looking at some code on the PC, and we can cut it after all. But Ali, welcome to Breaking Banks Europe.
Thank you so much for having me. And yes, I still merge code. I'm a geek. I love it. I'm a techie.
So let's start by a question that probably they've never asked you like this straight, but I really want to do it. How do you bootstrap a digital bank that becomes so big without capital at the beginning?
Well, the beginning of bunq is actually I'm a serial entrepreneur. I started coding actually when I was 9, and I started my first business when I was 16. And so I had this really successful company where I was very grateful for and very proud of. It's called Trans IP. Today it's called Team Blue. And that was doing really well. And there was a lot of talent there. And I wanted to give the talent the space to show me what they could do. And so I stepped aside. And now I was young, I was ambitious, I wanted to help the world forward. And I had a lot of time on my hands. So after the financial crisis, we came together with a bunch of people and we said, hey, let's try to create a bank that puts users first, is fully digital and fully mobile, for people like you, like me, like so many others that are international, that roam around the world, so that they have full control of their finances in a very easy way in an app. And I said, yeah, sure, why not? Because the financial crisis, especially here in Portugal, was so impactful for everyday life that I felt that we had to do something. A lot of politicians were shouting and finger pointing, but as an engineer, I like to think about the solution and how to prevent things going forward. And so I thought, well, it's time for a new bank, a new type of bank to be erected. And so we did that. So on the one hand, we had the coding skills in-house. And on the other hand, because my other company was doing so well, we had the money generated that we could invest in this new company.
Super interesting, and actually, you and I didn't have time to fully catch up. We only catch up on, when are we going to retire, but that's a private conversation that we will reveal one day. And but in 2012, I believe, or 2011, I think that I had the a Revolut beta on my phone, because the story you don't know, but I want to tell it again to the audience. I actually coached Nick to win the very first startup challenge at Swift.
Wow.
Well, with challenge that I created back then. And I did not invest, silly me, but hey, we all do mistakes. But the thing which triggers the question is, now that I know when you started and the why you started, actually the question I wanted to ask made, a lot more sense, which is, you started with everyone from the beginning, right? Because Wise was actually probably 1 year older than Revolut. So you guys were roughly the same age. And of course, a plethora of digital banks saw the light, some B2C, then B2B later on, someone with a more vast geographical remit, others specialized by country. So I feel that bunq was born to be unique. And can you try to explain this? And I don't know how to grasp it, but I feel it even in the way you're talking about it and in the words that you use when you describe it.
Yes, and let me thank you for that observation, because that is spot on. And that really is true. In fact, there's a book written about bunq, which has a title very similar to your podcast. It's called Breakthrough Banking. I don't know if you have it, but I'm happy to send you a copy if you want.
By all means.
And then to come back to your question, look, the reason why bunq was started was to create a company that helps the world forward. Because, talking about retirement, I've never needed much. As long as I have my laptop and some sunshine every now and then, which is a challenge in Amsterdam, I'm good. So bunq was not created purely for commercial reasons. It was created to be a healthy company. It was also created with the good of humankind in mind. And therefore, we have made many decisions that were maybe commercially not very smart, but in the grander scheme of things, with our focus on helping the world forward, was smart. So, for example, we started end of 2012. We didn't launch with a product, which I normally would do for a normal commercial but we started immediately with applying for a banking permit. Why? Because in our conviction, there hadn't been a greenfield banking permit in 35 years. And we thought, if we succeed in doing that, we will open up the door for so many others. And that
you ask
happened.
In the Netherlands, right?
Yeah, but the Netherlands is part of the European system.
No, of course. Yeah.
And so when we got that permit and we became the first in 35 years, actually, we did open the door, because although Revolut launched, I think, a little bit earlier than us publicly, they did not have a bank.
They first had a bank, indeed.
Exactly.
They were endorsed or backed by a bank, indeed.
Exactly.
Yeah.
And, many of the rules and regulations that changed were thanks to the Dutch regulator and us. We changed that whole mindset, the whole sandbox concept, many of those ideas, they stem from us. And so we were immensely proud when that happened, because we felt that even if nothing else would succeed, at least we did this one thing.
That is, that it is something that unless you say it, is very difficult to pass across. I'm happy that we are giving you the possibility to tell the story. And now switch into something a little bit more personal, but I think you're going to like the question. So what's usually you're either very good at coding or you're very good at managing/building, right? And I told you I have also a computer science degree, but I never wrote a line of code because my passion is building businesses. But that's also a downside, because I barely know whether or not a coder is trying to charge a quadruple of the hours for the same thing, but I can't really do it myself. You can. How do you manage this dualism, of competencies, and what do you like most, because now you're not exactly a startup anymore, right? So how did be interested in good in both sort of grew up?
Okay, so that goes back to my childhood, because, you're a coder, I'm a coder. We like abstract concepts, right? So one of the things that I didn't know until a couple of years ago is that my grandmother told me that even when I was 2 years old, I was disassembling telephones. The old telephones with the dial.
So you're also an engineer, technically, a mechanical engineer somehow.
I'll get to your answer. And so I was changing the wires, and then the ringer would go, and then I would laugh and be happy or something. So I think what drives me, whether it's coding or building a company or disassembling phones, is I like to understand how things work.
No.
I like to take them apart, see the components, see how they interact with each other, think, does this make sense? Does it not make sense? And then put it back together and create something new. And I think for me, the process of picking things apart and then creating something new that is what I like. That is what I like in coding. That is what I like in building companies. That is what I like in. I like when I was several years younger. I would also maintain my old car. I had a very old car. I would maintain my old car. I was like, hey, what does this thing do? Why is it like this? Why is it with this screw, or why is it with this at this torque? And I just like figuring things out.
I'm going to ask a question that is, but the reason why I feel I can is because I don't think you care that much. So even
you can ask me anything. I'm very easy.
I'm curious because I ask myself often the same question when I really have nothing else to do. Is there are today probably 50 to 60 decently sized digital banks in Europe. Okay, if you have to bet your money into something, you would bet more in digitals buying digitals, incumbents buying digitals, or like a coalition. Because I don't think, reasonably speaking, even here in Portugal, which is a roughly 10 million people country, Revolut is here, a portion of Wise is here, and there is a couple of local digital banks here. So, they are all, of course, claiming numbers, but mostly they are typically wallet with a couple of €100 that you bring that car to the beach. So if they steal it, whatever, but then the serious business is done somewhere else. So how do you see the evolution of this world?
That is a great question. So I think you obviously know lots about the sector, probably more than me. So with the caveat that you know better than me, I'm going to try to answer your question.
I don't think so.
Look, it depends on what your goal is, right? If I look at the sector as a whole, the number of companies that have successfully been able to become a plug-in bank replacement is far less than 50. So, for example, your observation that many of these companies are used, as a digital wallet is very accurate. But that doesn't hold for bunq. We are actually used as a day-to-day bank. The average deposit of an average user at bunq is about €3,000 from the top of my head. So it is actually 70% is used as a primary account. And if you look through those eyes at the competition in Europe is very limited. Then your question is what happens with those 50 or 45 companies? Quite frankly, I think a lot of these are not going to survive because similar to the .com boom and bust, a new technology, a new era at the beginning combined with a lot of money creates a lot of creativity and a lot of different venues. And then, as should be, competition takes place, some win, some lose, and then the clear winners emerge. So what's going to happen to those 50 or 60? I don't think it's all going to be mergers. I think many of them are simply going to retire. It doesn't mean that they need to, become losses or anything. They can sell their technology. They can do stuff. So they probably have assets that are worth something. But a lot of them are going to retire. Now, the question is whether there will be consolidation. I think if life would be perfectly rational, the answer to that would be yes.
Same.
But we are dealing with people. People have egos and characters and etc. So not always the most rational decision is being made. And so it depends really on how the world develops.
I'll take that. Ali. Listen, first of all, what is the origin of that rainbow logo?
I can tell you. I'd love to tell you.
Because I have a subsequent question to that, which I suspect will come naturally from your answer.
Okay. So when we started, I liked the color blue very much. But I couldn't, I felt like I couldn't use the color blue anymore because my other company already has the color. So then I liked orange a lot, but I couldn't use orange because, there's this orange bank in the Netherlands. So that was out of the question.
Giving lions to the people.
Yeah, exactly. So then we went back and forth on so many colors. We tried so many colors. And then my head of design at the time, who's still at my other company, Thijs, he knocked on my door on Monday. He said, Ali, I have an idea. It's a little bit crazy. Just let me know what you think. Don't shoot me. I'm like, dude, I'll never shoot you. I love creativity. Hit me. And then he came with a rainbow color. This guy has won all kinds of awards, etc. He said, you know what? The reason why we cannot settle for a single color is because we're not a single color company. We are diverse at heart. We are here to bring people together. We are here to build bridges. This should be our logo. And he showed me, and it was a draft, right? I think he just grabbed the palette, spent 5 seconds to it, and we have still used that very same draft. We never did. And if you look carefully at the logo, truth be told, I don't like the greens. They're not contrastful enough, and probably we would have chosen a different colors.
We won't tell it to your comms people, don't worry.
Exactly. But the concept was so strong and so aligned with what we're trying to do, especially at the time, right, where the world was falling apart, and we were trying to keep it together. It was fantastic, and that's what we have.
And that was, I want to say, way before it became, let's say, very mainstream and popular, So.
Yeah, so there's also the LGBTQI. I hope I have all the letters there.
Thank
movement.
you for saying this, you and not me, because I would have messed up.
But that is a different. That is actually a flag, and it has different colors. And yes,
but it's a good reminder.
It's a good reminder. I think that too. But it's not my flag, so it's not for me to comment on. But there too, it's trying to bring people together. But when we approved the rainbow color and we embraced the concept. None of us thought, it's going to be gay or homosexual or bisexual or whatever, because that was not the connotation that we had. We simply wanted to have a rainbow which is jolly and multiple colors joined together.
So I suspect as well, and indeed is a good segue to and a natural consequence. It's not only about openness, but it's also about sustainability, right?
Yes.
And I know that this is something that you're really proud of the way bunq is structured and built. Can you please, share a little bit more?
Yes. So the beginning of bunq is this giant mess that we were in 2012, right? So that explains a lot of the decisions that have been made and probably will be made. And that brings a number of things, because we saw what happens when people don't take their responsibility. And not just when mistakes, sometimes mistakes happen, fine, right? But then you should take your responsibility and say, you know what? We made a mistake, let's go fix it. But that's not what happened. People were pointing fingers, etc. So bringing people together is very important. At the time in Italy, for example, youth unemployment was 35%. So at bunq, we started employing young people purposefully. Because we were trying to do, there was so much intelligence, so much energy, so much creativity. We started employing those people, which obviously made our lives even more difficult at the regulator, because they were like, where you don't have enough experience.
Where is the beard and the ties and the
where's
suit,
the
right?
gray hair?
Or the no hair, right?
Oh, yeah. But anyway, that's the story by itself. So, and then because we employed young people, with it we also get a lot of young values of inclusivity, the values of diversity, the values of sustainability. And those values are the values that then subsequently became bunq values. So one of the things that we have at bunq, for example, is Meatless Mondays. That actually somebody came up with and said, hey, we really embrace sustainability. At least one day a week, we should stop eating meat. And these are things that people come up with themselves because they feel it's important to them. It's not because somebody thinks, we need to be compliant with ESG guideline number 578. It's intrinsically motivated, and therefore it's authentic.
One thing it looks like for sure is that bunq seems a place where both creativity, inclusivity, and the fact of simply, I'm thinking about the story of the logo, being able to be listened no matter how crazy you are, right?
Yeah.
So that seems the culture that you've been instilled in your company.
Definitely, and I'm very proud of it. And we have had a bunch of crazy stuff, right? But as a consequence, we have been able to serve our users in a way that nobody else can, and that's why I was so honored that you started with, hey, you can really feel the bunq is setting out to be different, because that is indeed what we are.
So I think that is going to be an exchange of books, because mine is Talent and Rebels, and it talks about how rebels should be listened more in companies to preserve that culture of innovation. So,
and mind you, we're doing this in a regulated environment, huh?
Exactly.
So you can only imagine how difficult that is.
Absolutely. Ali, it's been a pleasure. This is, we usually say that this type of conversation should last way more than half an hour, but I will invite you another time on Breaking Banks, because I felt there are a lot of more story to uncover. Thank you very much for being with us.
Thank you so much for having me. The pleasure was all mine. Thank you.
And this is a wrap. Hey guys, welcome back to Breaking Banks Europe, second part of the show, live, as you can see, from the Web Summit. I'm here and super honored too with Jaidev Janardana, the CEO of Zopa. Jaidev, welcome to Breaking Banks Europe.
Thank you for having me here.
So listen, first question. And it seems business related, but it's not actually. Okay. It's very profound.
All right.
So you did the opposite of every digital bank that I know, right?
Yes,
so
yeah.
because they want to start with the license, bring users, and then try to monetize it. That gets into lending.
Yeah.
So I used Zopa in the past, so I loved you guys from the beginning, from the mission.
Yeah.
So how do you explain this move of getting a banking license once your business was already very well established?
Correct. So for those who don't know us, we started life as a peer-to-peer lender, right? So we were actually the world's first peer-to-peer lender.
You did a lot of good, by the way, guys. Praise the Lord.
We hope we continue to do that. And in 2016, I joined in 2014. In 2016, we wanted to just do more with our customers. Right? So we wanted to offer them more lending facilities like car finance, and we wanted to help them save, right? And that's where we felt a banking license was the right place. But unlike the other digital banks, as you said, we started with lending and savings. And the reason for that were actually twofold. I would start from the customer's perspective. The choices they make, whether on how they save or how they borrow, can help them save thousands of pounds, right? So we felt there was a much bigger impact we could make with our customers if we started there rather than how to spend. Yes, spending helps you, but this is much more important. Second thing was our view on sustainable business models. So we wanted to make sure that we create a business model that is not dependent on interest rates, that can actually make a profit on its own, because that's the only way you can continue to do good. And ever since time, in banking, you make money by kind of lending and saving. So we said, let's establish a business that actually can make profit. And from there, we can go beyond. And that's why we started there. And of course, our legacy as a peer-to-peer lender really helped us, because we were well established as a lender. So that's why we started there. And I think it proved out to be very good, because within 2.5 to 3 years of being a bank, we were profitable, despite the cost of living crisis. We have grown rapidly since establishing as a bank. Revenue's grown almost tenfold. Customers, the number of customers who use us, again, fourfold. So making that shift was great. And now that we are here, now we want to actually step into everyday banking, provide spending, so and so forth. Yeah.
Do you think that Zopa's customer profile is different from the profile of the other banks in general?
Yes, if I compare ourselves to the neobanks, and I'm going by publicly available data, I think so. So I think we are more representative of the UK demographic. So our customers tend to be a bit older. So our average age is kind of more than 40, which I understand for most neobanks is low 30s. It's not London-centric. It's actually across the UK. They tend to be a bit more, bit above average income. So average income for a UK, the median income is about 36,000. For a typical Zopa customer, it's in the mid-40s. So they tend to be slightly more affluent, and that's because we haven't done that much in financial inclusion. We try to give value to people who have banks, but how to do better with them. So
So, and apologies because maybe I should have documented myself a bit better. But so to use Zopa, I don't need to be a UK citizen.
You do. Not a citizen, UK resident.
Exactly.
Yeah, UK resident, yeah.
So at the moment, you're basically UK centric in terms of So any plans to expand?
I think there's a lot more we can do in the UK, right? So if I look at our personal loans, which is our biggest biggest product we have about 4 to 5% market share, right? So when I look at the opportunity, I see a lot more to do in the UK. That said, the way we solve problems, the problems we're trying to solve are global. So we think international is in our future, but unlikely in the short term.
Yeah. Okay. And tell me a little bit about how do you see the evolution of the peer-to-peer lending business, as a whole? Because you guys founded a niche where no one else was looking at it. Then you plug the regulated business on the top, and now what I really find amazing is that with only 3 million customers, I think.
We are about 1.5 million customers. So
even better. So I don't know why I read 3 somewhere, but the fact that you're profitable with 1.5 million customers is amazing already per se, right? But how the business is like a public, do peer-to-peer lending is a public available. Why are you the only one who thought about this approach?
You mean the peer-to-peer lending?
Yes, exactly.
Well, I can't give it credit. That was done before my time. And the idea was to see if there was a more efficient way of connecting borrowers and lenders. And we have taken that idea and said, how do we expand that to maybe, is there a more efficient way to connect savers and borrowers rather than lenders? Because what we found was, in the world, there are a lot many more savers than there are lenders. Right?
Of course.
So we felt it was actually more efficient. The peer-to-peer business, I think for somebody who wants to start a lending business, it probably still is a very attractive way of doing one. The regulatory environment has shifted quite a bit in the negative there, to be honest. And that's partly because some of the early peer-to-peer lenders didn't do very well for their customers. So I think it's tougher today, but it's still probably, if you want to start a lending business, probably a good way to do it.
And the segue of the question that I was to ask, and actually what I had in mind but didn't express it is, as you know, we briefly, talked earlier. We are very present and developing our business in Africa, right?
Yes.
So my question was more, do you see the peer-to-peer lending business, growing strong also in emerging markets?
Absolutely.
But the culture is different, right? So this is what I wanted you to talk about.
So if you look at, some of the early peer-to-peer models, I think there were some very interesting peer-to-peer models that were kind of community-based and community-led, right? So
the Rosca model,
exactly,
right?
Exactly. That's there. The self-help groups in India and Bangladesh and so on. So I do think that particularly the emerging markets where banks tend to be, do not serve all the customers, and they often only serve the people who are salaried or who are rich, asset rich. I do think models like peer-to-peer have great potential, right? And the trick is to be able to figure out what is the right way to regulate it, such that customers don't lose money when they're not supposed to, but at the same time it's easy to kind of operate. But I do feel that if I look at the peer-to-peer businesses, I think Africa, India, Bangladesh, these places will still have a lot of potential for that, and it's a model that can do a lot of good if done right.
Tell me a little bit about the culture and people at Zopa, because I feel like, you all must sort of share a common vision, if I come and work for a company that has done so well, as well as started with this sort of impact in its DNA, right? How you as a CEO instill, this culture down to the rest of the company?
I think it starts with being being very clear about what we're trying to do, right? And for us, it's about helping our customers feel more comfortable with their money, help them make better choices with their money. And the whole ethos, the whole incentive structure, what we talked about is about that. So that's, I think that's one part of it. The other part is again to be clear about how we want to do it, right? So, and for us, the how has been about, we have to produce, to generate and give value to customers, to have them choose you. You have to give them compelling products, which means we have to be incredibly efficient and customer focused. And we've chosen technology and data as the way to do it. To achieve that, thus you want kind of what I think is I want people to come into the office with a smile, right, and be inspired to do great things, and be inspired by their colleagues, inspired by the culture. And I think we can do that if we can attract smart but nice people, right? People who are willing to almost subsume their personal ambition towards that greater purpose, that they see their greater purpose, like that's my ambition, and are not trying to say how does my role become bigger or how do I make a bigger bonus. It's more like how do I make that bigger impact, and then having a kind of a reward mechanism that actually rewards that behavior, right? That they see that when I do that, I don't have to worry about myself. The ecosystem takes care of me, and that's what we have tried to do, right? So try and attract people who are who are smart but are nice, who really believe in the cause, and then positively reinforce that behavior, and actually negatively reinforce behavior which is about self, which is about which is not in the customer's interest. And that is reflected well in our Glassdoor scores. If you look at our kind of Glassdoor scores, or how many people, more than almost 90% of our employees recommend Zopa as a great place to work, which is, I think, an order of magnitude different from some of our competitors.
And then it's great because in the world of post-COVID, where like the working digital and remotely is everything, the friction tends to be much lower. So people, for a couple of bucks more, they tend to switch because one digital job is more or less equal of the other. So you manage to retain people happy, which is already a great achievement per se, right?
Yeah. So I think creating that sense of belonging is important, and the sense of purpose. I think you both need to feel that this is a place where I belong, I matter, but also that we are doing something big. Yeah.
So tell me, Jaidev, how did you land up in Zopa? I mean, because you weren't part of the original co-founders, which was, when is it, 20 years ago?
No, so I wasn't. Yeah, I wasn't. Yeah.
So you became to impulse the digital banks, the financial services related. But what's your story?
My story. So I grew up in India, way long back, and then was an engineer for a while, worked in telecoms for a very short while, and then went to business school. And then I joined this firm called Capital One, which is one of the, they would argue, one of the initial disruptors.
Yes, of course.
And really learned a lot about how to use data and digital, growth in digital models. So that was kind of, and I spent time doing, marketing and product, credit, operations, so the whole gamut. So fast forward to 2014, I was still having good time at Capital One, but I felt my learning curve was starting to plateau.
There is only so much corporate life one can stand, right?
My learning curve was plateauing. And that's when I kind of met Giles, who was one of the co-founders of Zopa. And I really, what stood out for me about him, about Zopa and the shareholders were, that, there's a lot of talk about customers. The ethos was a very retail ethos almost, saying, we want to do right for our customers, which was great. But also there was a recognition that in financial services sometimes, and particularly in lending, sometimes it's important to be prudent. Not all growth is good. Because a lot of the other fintechs I was speaking to at the same time, I felt this could be a crash and burn, right? Because there was not that appreciation that it's not like an internet business. You have to, financial services is slightly different. And I felt that prudence was there at Zopa, and that combination of that prudence and that customer focus was like, I felt there was something to be done here, and so I joined, and I've now been 10 years in, and it's been a great journey.
Amazing journey indeed. So one last question on the data and the project itself, right?
Yes.
So, and apologies, but the part of the Breaking Banks audience is really like not super specialist. So everyone is thinking about data and AI.
Yeah.
But in this case, I am pretty sure that on one side, this enormous amount of data that even the availability and the access have changed during the course of this last year, as well as the way AI is shaping, getting to the decisions faster in terms of which process to find, customer profiling.
Yeah.
So, how could you incorporate, this technology, in the evolution of the Zopa software?
Yeah. So, in fact, focus on data and using technology to make decisions was one of my first priorities. So I joined way back in October 2014, and by mid-2015, we had migrated our credit decisioning, how we should give a loan, and pricing to a machine learning-based AI model. We were one of the first kind of people to do that back in 2015, and at that time we got to a place where I was getting comfortable making about 70% of my decisions automatically, instantaneously. Today that's 100%. So all my credit decisions are, and so we've been using AI and data. To your point, as data availability has got richer, as our models have learned and gotten more sophisticated, we've been able to actually completely rely on that. I think last 2 years, Gen AI shifts that in a different way, right? So I continue to feel that when it comes to things like pricing and credit decisions, we can still use traditional AI, predictive AI, but where generative AI, I think, it makes it a lot easier is, I think, staff productivity. For example, our coders use it very much to write some of the code, right? But and a lot of back office stuff, which is kind of interesting. But I think what will be even more interesting, which I'm hopeful that we will be able to do something next year, but others will also, is a customer-facing proposition with Gen AI, right? Something that really helps you make your finances even more effortless, right? That could be as simple as, telling them, remind me to pay my bill, or tell me if I'm going to not have enough money, or it could be more complicated, like, I'm looking for a savings account. What are the best options, right? So, and having that as a conversational thing would be the next exciting thing, because ideally, in 2 to 3 years, you should be in a place where everybody has a personal financial assistant on their phone. Of course, it's AI, but I think that'll be the more exciting thing to do. And I expect that next year we'll start to see a lot of that happening.
Which is actually, this personal assistant that everyone should have. Sort of, it's a segue to my next question, or at least the next topic I want to talk about, which is the whole financial literacy aspect.
Absolutely.
So, probably if you ask 100 people that are not in finance what peer-to-peer lending is, hardly half of them would never heard of the word, right? So my question is, if you're not into the traditional way of saving money, you need to be sort of like financially educated a little bit, even to not to get into the charm of your usual banker who says, hey, put this 10K there, wait and come back in 10 months, which is this mass affluent business that everyone is chasing after, right? So how do you think is, or a couple of tips on what is the best way to give this sort of sense of responsibility and culture in terms of investing? Because, you seem to have given it to 1.5 million people, right?
So we think small steps and easy actions are the best thing to do. So, I'll go back to an initiative that we actually led along with another fintech, Clear Score. This was the beginning of the financial crisis, where we said, you know what, financial crisis, the cost of living crisis is happening. This is 23 years ago. Cost of living crisis is happening, and finances are going to be stretched. So how can we help customers in simple ways? And we said there are 4 or 5 things, very simple things they can do. One, if they have savings, at the very least, put it in an account which is giving them some interest, right? So 2, if they have debt, look around if it can be cheaper. Three, monitor their credit score and see if, what actions can they take. If they can have access to benefits, look at that. So it's things like that. There are simple actions that they could take. And we put together a coalition of about 45 fintechs who got together, who push those actions to their customers. As a result, we almost had, in the UK, we are at about 16 million actions. So 16 million people, quite a few people have done some of these steps.
Yeah.
These are baby steps, it helps them. And once they're then in it, then you start to provide some of the more education, saying, oh, you've done that, now, how about this? So I do think that when people think about investing, when people think about savings, it seems so big and so hard that it's very, and so it's not for us, I don't have the money. Everybody has a little bit of money. So I think starting small and making it in their control and making it easy is, I think, step one.
This is actually my own curiosity, but I bet, if I had to take a guess, that whatever projects are funded through Zopas, the same founders are then you have a lot of repetitive customers, as well as someone who is one of the lenders. Usually, once they experience the lending, then they come back. You have a lot of both returning customers and returning projects. Is that true? Because the culture of the peer-to-peer lending is something that the more you do, the more you are inclined to do it, right?
And as we think beyond, as we've thought beyond peer-to-peer lending and into savings, we've seen the same thing. So today, when somebody saves with us, about a third of them will have multiple products. So there are multiple ways of saving, right? We over a 2 to 3 year period, we retain about 90% of our customers who save. People who borrow from us, over a 5 to 6 period, majority of them come back to use us again. So we created an ecosystem that has gone beyond peer-to-peer lending and into banking itself, where we are saying people are willing to do more with us and continue to do more with us. And that's why for us the next step in our journey is to go beyond the borrowings and savings and actually step into everyday banking in a more broader basis, because we can see that people actually want to do more with us. And the number of people who have more than one product continues to increase by about 30 to 40% year on year. So
it will basically follow your, I want to say, reverse engineering, customer journey, where you started with the lending, and then you got into banking, and then you go everyday banking, which actually is the opposite
end, But we feel that we come from a stronger, good foundation of a good business model.
That's why you guys are rocking.
Thank you.
Jaidev, thank you very much for being with us.
Thanks
it's a pleasure, and I know that you are a very busy man. You just came out from from another speech. So I'll let you go on with the Web Summit. Thank you for being with us.
Thank you for having me here. It's a great place, and it was a great conversation. Really enjoyed it.
That's the Breaking Banks Europe at the Web Summit in Lisbon, and it's a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.